like the stock market has done some nice recovering, right? We're not all the way back, at least on the Dow, maybe the S&P. But I have this notion, so in the first quarter, we had a normal January, normal February, right? Shelter in place was in March. We're going to see, you know, when companies released earnings for Q1, you know, there's a lot of bloodshed in the market. In the second quarter, we have, you know, April, May, and June, all of which will have been, you know, asterisked with the pandemic. And I think people have been trading largely on emotion, which is not uncommon. But in this case, like on health news, you know, did we flatten the curve or not? Or is the percentage of people dying increasing or going down? You know, and when there's positive health news, the market tends to respond well, and when there's bad news, it kind of goes down. At some point, the investing public's going to return to like investing fundamentals, like did the company make earnings or not? You know, what's the earnings per share? And so I'm a little worried that when Q2 earnings are released in say July, we may see another big retraction in the financial markets. What do you guys think about that? Have you thought much about that?
Yeah, absolutely. My thoughts are that the market's priced in a pretty bad year for stocks. And if you notice the recovery, that's been mostly in tech names that have big balance sheets, right? So you have Apple, Amazon, you know, all these companies that have either a lot of cash on hand or access to cash. So you saw a rotation. The reason why the NASDAQ is almost at all-time highs is that you saw a rotation of people, blue chip like Boeing and all that kind of stuff flowing into names like, you know, Facebook, Google, companies that you know aren't going anywhere. But interestingly, the past couple of days, my NASDAQ portfolio hasn't moved, but the Dow has been taking off. So you're now seeing the reverse happening. So meaning people are now, okay, it just seems like people are like, okay, things are now opening up. The reason the market fell so much was because there was uncertainty. How many people are going to die? Are millions of people going to die around the world? Are millions of people going to die in the U.S.? Are you know, what's the Fed going to do? Is the Fed going to do anything? Like in 08, they were late to the game. Are policymakers gonna react quick enough? I think it's been kind of the way that the world's policymakers and financial decision makers have reacted to this pandemic has been phenomenal. I mean, they have said, listen, we're not gonna let the markets tank. We're gonna do whatever it takes to support them, and we're gonna provide unlimited, you know, liquidity if necessary. And so the reason why you're seeing the rates being so low is that there's one is that, you know, it's encouraging buying, right? So people that can buy because the Fed cut to zero almost. But number two, there's so much liquidity that people have to put it somewhere. So where are they going to put it? They're going to put it in US real, like if I'm in China or if I'm in India or if I'm in the Middle East, where would I put my money? I'd put it in the US, and not just the US, I'd put it in the Bay Area. I'm not going to put it in Nevada, or I'm not going to put it in, I mean, I'd put it in Texas maybe, but if I have money, why wouldn't I put money in the Bay Area?
That's a really good point. As
it's going to grow over time.
Yeah, we have a few clients from Asia actually contacted us and then saying they want to buy real estate here, even though they know for the fact that we are still in shelter in place, but they still want to invest here in the Bay Area. It says something.